Bitcoin is sitting near $62,000, and the crypto market is struggling again. But this time, it is not just about crypto. The U.S. and Iran situation appears to be heating back up, and the peace deal that calmed markets for a moment is already looking fragile. And when headlines like this come back, markets do not just react to missiles, they react to oil. That is the part a lot of people miss. The Strait of Hormuz is one of the most important oil shipping routes in the world, so when conflict picks up in that region, traders immediately start pricing in the risk of higher oil prices. And higher oil prices can mean higher inflation. Higher inflation can mean central banks stay tighter for longer, and tighter policy usually means less appetite for risk assets. That is why this is hitting more than just Bitcoin. Stocks get nervous, tech gets pressured, bond yields can rise, the dollar can strengthen, and crypto, especially altcoins, usually takes the hit first, because it is one of the most liquid risk markets in the world. So even though Bitcoin is supposed to be a hedge against chaos long term, in the short term, traders often treat it like a risk asset. When fear spikes, they sell what they can. That is why Bitcoin can fall during geopolitical panic, even while the long-term Bitcoin story gets stronger. Because the real question is not just, is there a war? The real question is, does this create an oil shock? If oil keeps pushing higher, the market starts worrying about inflation all over again. And if inflation becomes sticky, then hopes for easier money get pushed further away. That is what holds back crypto rallies. Not just fear, liquidity. Bitcoin needs confidence, but it also needs liquidity. And right now, the market is dealing with the opposite: uncertainty, rising energy risk, and investors moving more defensively. But here is where it gets interesting. If this conflict does not turn into a larger supply shock, this could become one of those moments where the market panics first, then slowly realizes the worst-case scenario did not happen. That is why I am watching three things: oil prices, the US dollar, and whether Bitcoin can hold the low $60,000 range. Because if Bitcoin holds while the headlines are this ugly, that tells you there is still real demand underneath the market. And that is also why some crypto investors are still looking at early-stage opportunities instead of chasing the same crowded trades. One project getting attention right now is Bitcoin Hyper. Bitcoin Hyper is currently priced at 0.0136828, with the next price increase coming in less than a day. It has appeared on CoinMarketCap and has been covered by 99 Bitcoins and other crypto publications, which is one reason more traders are watching it during this market pullback. The idea is simple. While Bitcoin remains the main asset, investors are also looking for projects built around Bitcoin's next phase, especially if the market eventually rotates back into higher-risk crypto opportunities. Of course, pre-sales are risky. Do your own research and never invest money you cannot afford to lose. And if you are buying, storing, or tracking crypto during volatile markets like this, Best Wallet is also worth checking out. Best Wallet makes it easier to manage crypto from one app, track tokens, and stay ready when market conditions change fast. Because in this kind of market, speed matters. When geopolitical headlines hit, crypto can move before most people even understand what happened. So for now, the big question is this: is the U.S. Iran conflict just another temporary fear event, or is this the beginning of a bigger oil shock that keeps holding Bitcoin and the entire market back? Bitcoin is near 62,000. Oil is the key chart to watch, and crypto is waiting for the next move.